Welcome to episode 2 of the Forex show. Thank you so much for being here. In this episode, I'm going to teach you the basics of fundamental analysis, how to use interest rates and economic data to make money from the Forex markets. I have some websites that I want to recommend to you. I also have some analysis. So let's get started.
There was once a day that I would pray for you. I'd go and misbehave just so you'd notice too. Sneaking looks up and down from across the room. And damn, what a hell of a view.
So thank you so much for being with me. Episode 2 of the Forex show. Fundamental analysis. The missing key to success in Forex trading. So many traders know technical analysis or dive right into technical analysis and try to profit from the Forex markets using just technical analysis, and they don't see a great load of success. If more traders learnt and implemented fundamental analysis, they would see their win rate go up and they would see success overall. They would feel a lot more professional in the way that they approach the markets. They would sound a lot more professional for sure, and I think they would actually have more enjoyment from trading. It would help with their risk management. It helps in so many ways. So why don't people implement fundamental analysis? I think it's down to a few reasons. Number one, technical analysis can provide this easy way to make money. You can look at some sort of level, you can look for a particular candlestick and trade that. It's too appealing. It's so easy. It's easy money. People love easy money. With fundamental analysis, they think there's this extra effort, this extra work that's involved, and it puts them off. I think that's one of the reasons. Another reason why people don't like fundamental analysis or use fundamental analysis is they just don't understand it. But in this show, in this episode, I'm going to show you that it's really simple. It's really simple to use, to track, and you will see success pretty much straight off the bat by using fundamental analysis. So stick with this video and I will teach you the basics and show you how simple it is to use fundamental analysis. Another reason, so a third reason why I think lots of people don't use fundamental analysis is all these trading gurus that are on YouTube. I'm on YouTube, that these trading gurus that are on YouTube, that are on websites that are showing easy money, they don't teach fundamental analysis. They focus on the technical side of things, probably because they don't understand fundamental analysis themselves. They don't use it. So when technical analysis is smothered across the trading industry, the retail trading industry online, it's no wonder people are more drawn to technical analysis rather than fundamental analysis. But the real key to success is combining both. And many, many years ago, when I was on babypips.com, this was 12 years ago when I first started trading, they taught both fundamental analysis and technical analysis, and I remember clearly reading that successful trading lies between both of them. That using both of them, both the technical analysis and fundamental analysis, is really where you want to be. You want to be taking trades that agree with your fundamental direction and your technical direction, not just the technical or not just the fundamental. You combine the two to give yourself a greater edge when trading. So what is fundamental analysis? What the heck is it? Well, just like technical analysis, we use patterns. I have a chart. It'll be behind me, but I can sit in front of me. You'll have a chart. You might have certain candlesticks. You might have moving averages or some sort of support and resistance. We use these things to try and predict where future price is going to be. So we're looking at historical price data with these indicators that are usually formulated from price data to predict where future price is going to be. So what is fundamental analysis? it's exactly the same concept. We're using economic data instead of the price data to predict where future price is going to be. The analysis is the same. They're both generally lagging. People who don't really know what they're talking about will say, oh, don't use technical analysis because it's lagging. Well, economic data is lagging. It's all in the past. And we use historical price data in technical analysis, and we use historical economic data in fundamental analysis, both to predict where future price is going to be, because if we can predict that, we can make money from that. If Euro US dollar is going to be higher, we want to be buying. If Euro US dollar is going to be lower, we want to be selling. It's as simple as that. So that is what fundamental analysis is. It's using data to forecast future price movement, just like you do with technical analysis. So if you look at trends with technicals, if you look at support and resistance, it's not very different when it comes to fundamental analysis. Now, why is it important that you use fundamental analysis? Well, I've kind of already answered that to a degree. I've taught you that using both fundamental analysis and technical analysis can lead to greater success in trading, so that's why you should be using it. But another reason that I haven't mentioned is the fundamentals are what is driving the market. If Australian dollar, Singapore dollar has been downtrending for the last 6 months, that's nothing to do with technical analysis. These market movements are caused by fundamental analysis. It's fundamentals, it's market, economic data, it's interest rates and all these other things that are moving price. The technicals do have an influence on price. If price has been rallying and we hit a resistance, it could be that there's like this technical respite that happens. There's a bounce at this resistance because people have their take profits there. Technical analysis does influence price, but the real driving force is fundamental analysis. So if you can understand that drive, you'll see a greater portion of success in your trading. So this is the real main point now of this show, and that is, how do we use it? How can you, who have never used fundamental analysis before, how can you use fundamental analysis in your trading? I'll keep things as basic as possible, and the first thing you really need to know is interest rates. Interest rates are what drives the FX markets. Watching and knowing about interest rates will help you to be able to potentially know future price direction. So if I bring up my spreadsheet, so I have a spreadsheet on Excel that I keep for interest rates. The actual current rate, or let's not start there, let's go back a step. Interest rates are generally released every month. So you can see every month here, this is broken down every month by country. The interest rate is announced by the central bank of that country, so the Reserve Bank of Australia usually announce rates once a month. The Central Bank of Canada, which is the Bank of Canada, do the same with the Bank of England, yet the Federal Reserve for the United States. These central banks decide, set and announce the official rate for that country. It doesn't really matter what the rate is. It doesn't really matter that Australia has 4.1 and Canada has 4.75. What matters most is, what are rates doing? Are they rising? Are they staying the same? Are they coming down? Are there rate cuts? Are they pausing? Are they hiking? Is the Bank of Canada currently hiking rates? Is it pausing rates? Is it cutting rates? And that's what you can see if you track these rates month to month. You can get a good idea of what these central banks are doing. If we look at the United Kingdom here, so the Bank of England, every month pretty much rates keep coming up. The Bank of England is hiking rates. If we look at, say, the Bank of Japan, they've stayed the same right to the beginning of this spreadsheet, minus 0.1%. they have stayed negative, haven't changed at all in all that time. So that rate is paused. So how does this impact the Forex markets? Well, the rule of thumb, and don't take anything that I say as complete gospel, because there are other factors that influence the markets, but the rule of thumb is if interest rates are moving up, that is good for a currency, and you'll see strength in that currency. So if the United Kingdom is putting rates up, you should see strength in the pound. If rates are paused or cut, you generally would see weakness in a currency. Now, there are times when that is not going to be the case. For example, in Turkey, they have been putting rates down, but the currency continues to weaken because they shouldn't be putting rates down. So as long as a central bank is acting logically, and there's a very orthodox approach to interest rates, then the general rule of thumb is if rates go up, the currency will go up. If rates are paused or cut, then the currency will come down. And we saw that recently with the New Zealand dollar. So if you watched one of my videos recently, you'll know that the New Zealand dollar really fell. Why did it fall? If you watch the video, you'll know. If we bring up, say, an hourly chart of New Zealand dollar, Canadian dollar, what caused this big move here? It was the Reserve Bank of New Zealand deciding to pause rates. They were hiking rates. They then decided to pause rates, which caused this weakness in the New Zealand dollar. We've seen the same with the US recently, and I'll come back to the US dollar a bit later on in this show. Interest rates. Use interest rates. Now, what I do is I have another tab on this spreadsheet called Currency Fundamental Analysis, and basically focus on this section only, this part here, these 3 columns that I've highlighted, or let's do 4, these 4, just focus over here, don't worry about anything else at the moment. These 4 columns are my interest rate analysis and the bias that I can draw from that analysis. So the Australian dollar, Australia, their interest rates are currently increasing. It's a buy. We've been through this already. Same with the Canadian dollar, the Swiss franc. Now you might think, well, if you've got a very keen eye, you might be thinking, well, you've put increasing and that's a buy. But if we look at interest rates for Switzerland, they've stayed the same for the last 2 months, even though they've been coming up generally. That's because the central bank for Switzerland, the Swiss National Bank, recently announced that they are going to put rates up further. So I'm expecting interest rates to continue going up. How I know that, I'll share that with you later. Okay, increasing in Europe, so the euro is a buy. They've been paused in New Zealand. The New Zealand dollar is a sell. Same with the Mexican peso. The yen is a sell, and we can see that once again in the charts. If we look at, say, the Australian dollar, which is a buy because of the interest rate, and the yen, which is a sell. And if we look at Australian dollar yen, just look at this movement. We go to the daily chart, look at this. This is caused heavily by interest rates. Look at the general direction here. Hopefully you're starting to see how this can benefit you. You're starting to see how the puzzle fits together, why these movements are happening. That's interest rates. If you have any questions, leave a question in the section below. I have another column here, so I highlighted 4 columns. This is other. There's another major factor that drives currency price, and that is this major news that is covered across the globe that has major economic impact. These are not things you have to watch Bloomberg for. These are things you'll just know about because they're on your local radio station constantly. Things like the war in Ukraine. When that kicked off, that really drove the markets. Things like COVID, Brexit, global recession, political upheaval in a certain country. These things drive the markets even more so than interest rates. So if there's just two things you can take away from what I've said in the last 15 minutes, that is, one, interest rates move the markets. Pay close attention to them. Number two is these major events drive the markets even more. If there is a war breaking out, if there is a recession, global recession coming, if there is some sort of referendum like Brexit, if there is a pandemic, these major events will drive the markets more than anything else. They're the things to pay attention to. Hopefully you've learned a lot already. If you've learned something, if this has been beneficial to you, like the video, please. Any support is appreciated. Just say thank you in the comment section below. How about this minor comparison? Well, there's all this economic data that comes out, and I follow. There's a big van outside my office window. You might hear some background noise. There's lots of economic data that you can follow. I personally follow inflation, unemployment rates, GDP growth. That's quarter on quarter. This is month by month. This is year on year. PMI, retail sales. You could follow lots of other things too. Non-farm payrolls, trade balance, that sort of thing. This is what I focus on. Focus on something that interests you. Let's just go through perhaps these first three, otherwise this show is going to go on forever. But I have this sort of minor secondary analysis, and the reason why I have that is, you know, if you have the Australian dollar, which is a buy because interest rates are coming up, and you have Switzerland, which is also a buy because interest rates are coming up, and you see something technically interesting, you know, perhaps a buy on Australian dollar Swiss franc, what do? Because your fundamental analysis both says both buy Australian dollar and buy Swiss franc. So how does that work? Well, that's where the secondary analysis comes in. This economic data for Switzerland is actually quite poor in some areas. So that's a sell for me. Whereas Australia, the economic data is much more healthy. So this secondary analysis can come into play when you're unsure with this major analysis that's really based on major events happening across the globe and interest rates. We are starting to get a bit deeper now, so it's going to be a bit more confusing. Obviously you can ask me questions below. Obviously you can rewatch the video. But here we go. Inflation rates. This inflation rate really has a huge impact on interest rates, and interest rates are heavily based on what inflation is. Inflation should be about 2% year on year. Okay, so if I go to my other tab now, so I've got the other tab here. Actually move this across if it lets me. There we go. So inflation rates, once again I track inflation rates. It is important what the current rate is, but what is more important is the trend. Is inflation coming down? Is it going up? Is it staying the same? If inflation is not at that 2%, around that 2%, if it's above it or below it, that is not a good thing. And rates generally change according to the inflation rate. The central bank is charged with the main responsibility to have healthy inflation, which is generally 2% for most economies. The way this works is if inflation is high, rates will go up, generally. That's the orthodox approach. If inflation is too low, so below that 2%, rates will be cut to bring inflation up. And I could spend a whole video talking about inflation and trying to fit in a lot into this small video. So that's inflation. Now, when an inflation figure is released, it moves the markets. Why does it move the markets? Because people are predicting what the interest rate is going to be based on the inflation rate. And we saw that last week with the US. Inflation was much lower than expected. People then thought, okay, well, the US, the Federal Reserve is probably going to start pausing rates now. And they did. And the US dollar weakened. But it didn't weaken from the rate announcement. It weakened from the inflation figure that was released, because the inflation figure suggested that the interest rate was going to stay the same. So predicting what the interest rate is going to be can really help you to get into trades even before the rate announcement. It's all about interest rates. This inflation rate is important because it influences the interest rate. Unemployment rates. So with unemployment, if I go back to my currency analysis, generally speaking, 3.5 to 4.5% is considered healthy. If unemployment rate, this is month by month, is below that, you might think that really low unemployment is a good thing, but it's not. And if we're below that 3.5 or we're above that 4.5, that's not considered a good thing. GDP growth, once again, I could spend a whole video on GDP growth. This is quarter on quarter. Basically, it's the growth of an economy, how much an economy has grown in the last quarter. This can be negative and it can be very low. You're really looking for something between 0.5% and 0.75% per quarter. If you have 2 negative quarters, which has happened in New Zealand, then you have a technical recession. If you have any questions about any of these things, we could talk about PMI, retail sales. The important thing is to track economic data that makes sense to you, that you find interesting. And then you can gauge the figures. Are they good? Are they bad? To create like this secondary analysis. So if I was looking at this, I'd say I definitely want to be buying Australian dollars. We have a buy here and a buy here. The economic data bias is a buy. The interest rates are coming up. That's a buy. I want to be buying that. What do I want to be buying the Australian dollar against? I want to be buying it against something that's very weak. If we look at, say, the Danish kroner, we have a sell and a sell. If we look at the yen, we have a sell and a buy. So it's still a good trade, but perhaps not as strong as against the New Zealand dollar, which is a double sell here, a sell and a sell. Or the US dollar, which is a sell here. That's what we do. Or that's what I do, anyway. And then I try and combine this with technical analysis, because it could be that your fundamental analysis suggests that you're going to buy Australian dollar, US dollar, but the technicals are looking very bearish. So you wait for the technicals to agree with your fundamentals, and then that gives you, hopefully, a very good trade. Hopefully, this has helped. I've been through a lot in the last 20 minutes. This is the basics of fundamental analysis. This is how I use fundamental analysis to trade the markets. Any questions? Leave something in the section below. At this point of the show, I generally have a book that I recommend, but because this show is very heavily focused on fundamental analysis, that's the theme for this show, this episode, I thought I'd recommend some websites that you can use for fundamental analysis. Number one is Trading Economics. TradingEconomics.com. What I can do is actually lift this up so you can see the URL here. TradingEconomics.com. You might be wondering, where did I get all this information from? These historical unemployment rates. Trading Economics. Go to the search box. New Zealand. Unemployment rate. Here we go. So you click on it and it will give you historical rates. Okay, so you can create your own spreadsheet. You could do United Kingdom GDP growth rate. You can have a look at that, and then you have your figures there. So a really good website for fundamental analysis for economic data. It's fantastic for economic data. Now, what's also great about this website is there's this calendar here. If you create a free account, there's no charge whatsoever. I've just clicked on something I shouldn't have. There we go. If you create a free account, there's no charge whatsoever. You just create an account, log in. What you can do is actually click on these alerts here for the economic events that you're interested in. and then you'll be notified by email what the next set of data is. So here on Wednesday, we have inflation rate year on year for the UK at 7 o'clock. That bell was ticked. I would never have to tick it again. Every time a figure is released, an inflation rate figure year on year for the UK, I'll be notified by email. I have that email and I can update my records and perhaps change my bias if the figure is particularly strong or weak and it influences my overall bias of a currency. I've got the same here for South Africa. We have retail sales here for Canada. That's one of the things that I track as well. So a really good website. Another website is Bloomberg. Now Bloomberg is great for their website is great if you want to read articles, but what I do is I follow their free news channel, okay, which is here. I won't click play because I don't want like this copyright strike, but this is Bloomberg Global Financial Market News Live. You can watch that for free. I just have it going on in the background while I work. I know everybody can't do that. You know, they've got full-time jobs or they're students or something like that. So what you can also do is you can follow them on Twitter, on Facebook, Instagram, because they also post interesting articles and things that are happening in the financial markets. News events are impacting the markets on those feeds. So you can go there and watch that. The Financial Times is another. Once again, if you prefer reading the Financial Times here in the UK, but you can subscribe digitally. It's a newspaper. But you can subscribe digitally anywhere in the world. A really great paper, really respected for the economic insights that it can provide. Once again, you can follow their social media. I don't personally, so I don't know what they post. But that can be another source for you. YouTube, follow YouTube channels, news channels, anything that can provide some sort of insights. With Forex, when it comes to fundamental analysis with Forex, you're trying to gauge something globally, and I think the fundamental analysis is so much more challenging. I'm not saying it's hard, but it's more challenging in the Forex world because you're trying to keep on top of lots of different economies, you know, across the globe. When we talk about fundamental analysis for stocks and shares, then you're really just looking at the profit and loss and balance sheet of individual companies. It's so much more simple, in my opinion. I'm not saying it's hard, once again, but you need to try and keep on top of everything that is going on in the world, especially this economic data and the interest rates. So that is it. Trading Economics, Bloomberg, Financial Times, YouTube channels. Use those things. All of them are for free, apart from the Financial Times. Use them. They're a great source for fundamental analysis. Okay, the last segment of the Forex show, I usually do some sort of analysis. I say usually, this is only episode 2, so the previous episode I did some analysis, and I plan to do that in every episode of the Forex show. So now's the time I would do some analysis, and usually I base it very much on technicals, looking at technical levels and general price direction. Once again, I'm going to change things slightly because this is an episode all about fundamental analysis. So let's look at some potential fundamental trades. If you watch my previous video about the Turkish lira, if you haven't done so, please go and watch that. Things could be changing for Turkey. I'm not suggesting to anyone to go and buy the Turkish lira after watching this video. What I am suggesting is all this selling of the Turkish lira could be coming to an end. Okay, and the reasons for that is potentially a change in interest rates. There we go again, interest rates. A change in monetary policy by the central bank of Turkey. And it's not really the central bank of Turkey, it's their president, Erdogan. This is all explained in the previous video, but basically interest rates should have been going up in Turkey, but they haven't been. And it's causing great weakness in the lira and has done for many years now. There are some potential clues, some potential reasons for Erdogan's stance changing in the coming weeks and months, where we could see interest rates, there we go again, interest rates hike in Turkey. If that's the case, we could see the end to this selling. I'm not suggesting that this thing is going to come down like this. It could, but it will definitely put an end to the selling, and lots of people are, well, I can't say definitely will, it might put an end to the selling. Lots of people are short the Turkish lira, lots of money is short the Turkish lira. Them just winding down those positions because of interest rates going up would cause a move down for this pair, and Turkish lira yen a move up on this pair. Strength for the Turkish lira, so that's something to look out for. With the difference in interest rates, because swap rates, those overnight fees that you pay trading Forex, are based on interest rates as well. There we go, interest rates, they have a huge impact on so many things. If we look at Turkey, their rate is 8.5%. If you're trading against the dollar, which is 4.5%, or the pound or the euro, whatever, you're going to have a positive swap rate. And if rates are going up for Turkey, if this hits 9.5, 10.5, 11.5, that positive swap rate is going to be even better. So even more reason to be buying the Turkish lira. None of this is guaranteed. This is a very controversial trade. Some people don't like me going on about it, but it's something to look out for, something to be aware of. Other potential trades, the US. I said earlier that I'd bring back the US dollar and talk about the US dollar. The US has been strengthening for a long time. It keeps putting rates up, but it has just recently paused its rates, and possibly could have paused interest rates now for the foreseeable future. It's not guaranteed. But if it is the case that interest rates are now paused, that we don't see further rate hikes, what does that mean? Well, I told you that a pause or a cut in rates generally means weakness in the currency. I think we're going to see the US dollar continue to weaken, especially against currencies that are both economically strong and have rates still increasing, such as the Australian dollar, perhaps the Canadian dollar. Look out for those pairs: US dollar, Canadian dollar, Australian dollar, US dollar. If we look at Australian dollar, US dollar, some of this is already been priced in since, look at this, this was mainly driven by some good economic figures for Australia, and then that good inflation figure, in the sense it fell down for the US, and then them deciding that they're going to pause rates. That's what's caused this move here. We could see more moves like this if these fundamentals don't change. But things can change quite quickly. This is why you need to keep on top of things. It could be that the Reserve Bank of Australia decide to pause rates as well. Then you have two sales here. So the trade might not be as attractive. US dollar, Canadian dollar. Canadian dollar's a buy for me, definitely at the moment. The US dollar's a sell. If we were to look at US dollar, Canadian dollar, we've broken a key support level just last week, once again caused by the US deciding to pause rates. Look at this key level here, around here. It's a diagonal level really, more than a horizontal level, but we've broken this key area around here. This thing could continue to move lower if the fundamentals don't change, or if they strengthen further in the bias they're currently given. We have this big monthly range. We could see this thing come down to this range support if the fundamentals don't change, but they could. It could be that the US starts raising rates again. It could be the Canadian central bank decides to pause rates or even cut rates. We don't know what the future holds. Australia is a buy-buy. New Zealand is a sell-sell. Australian dollar, New Zealand dollar. I'll be looking to buy this. This is potentially a good trade. We've seen this already. Some good upside over the last month or so. We could see this to continue to move higher. There will be these technical respites. When you see the move down, that's when you want to be looking to buy. We get on the retrace moves. You combine the technicals with the fundamentals. So I know I want to be going long Australian dollar, New Zealand dollar. Technically, it might be good to wait for some sort of pullback before opening that position. I could go through loads of trade examples, but they're really the key ones. I want to be buying Australian dollar, selling the New Zealand dollar. At the moment, I want to be selling the US dollar. Potentially on the horizon is a buy Turkish lira, but we'll wait and see. New Zealand dollar is a sell. Group these currencies together, compare them against each other, and then look for those technicals, key support and resistance, retrace moves of trends, patterns, price testing, moving averages, that sort of thing. I love technical analysis. You know that this is a price action YouTube channel. I love the price action, and combining the price action with fundamental analysis will lead to great things. Everything I've covered in this video I'll link in the section below, so look in the description, there'll be links to click on things. Thank you so much for watching this episode though. I do appreciate it. As mentioned before, all support is appreciated, so any likes, comments, subscriptions would be fantastic.